Hi everyone, you're looking at a daily chart of Apple. As you can see, Apple had a strong run up since mid-June, and it has come up to an area of resistance. It backed off slightly from that level, so we wanted to understand the levels that it can find support. To do that, let's have a look at a different daily chart which has a few more indicators. So here I've got three indicators here. The black one is the 200-day moving average. The yellow one is the daily 20 exponential, and the green one is the daily 50. So once it started to rally, the two moving averages, the 20 and 50, which were trending lower, started to cross and move higher. Obviously, this is a positive sign. And what we also see is that the yellow one, the 20 EMA, has already crossed above the 200-day moving average, the simple moving average. The 50 hasn't crossed yet. Right here, back in May, the two moving averages fell below the 200-day moving average, and this was a bearish cross. Right now, we're about to see a bullish cross. Once the 50 EMA crosses above and stays above that level, this would be a bullish cross. So that's a positive sign for Apple. Definitely the stock has had a good run up, and many of the indicators are in overbought territory. So let's talk about those briefly. So the MACD, you can see the MACD had a very strong run up. It was below the zero line when it first started the rally. This is where it crossed above the zero line, which is positive, because that shows that the momentum is positive. RSI was below the 50 level. The momentum was weak, but once it started to rally, it started to go up. It crossed above the 50 level right here, and that's when the momentum started to increase. RSI 50 is an important level. You can see that RSI 50 was a resistance here. You can see there was it acted as a resistance here. So once it was able to go above RSI 50, the prices start to go up. The RSI momentum continued to rise. But now what's happened is that it's reached close to 80 level, which is overbought. Obviously, momentum is positive, but it's in overbought territory. Stochastic indicators are also in overbought. So given all of that, there is potential for some consolidation, pullback. So let's talk about the levels that it can pull back to. So let's start off with a smaller time frame, and then I'll come back to the daily. So if we look at the 2-hour, this is a 2-hour chart of Apple. You can see I have a trading channel drawn, and it has touched the upper and lower end of the channel number of times. So this channel will guide us on a short-term basis. As you can see, since reaching the top end of the channel, it's been pulling back. So one possible area that can pull back is to the lower end of this channel. So depending upon when it touches, it's around 168.50. So that would be one area of support, because it bounced off the lower end of this channel several times previously. So we would expect some possible dip buying if it were to pull back to the 168.50 area. So that would be the first level of support using the trading channel. If we go back to the daily chart, and have a look at it, 168 would be right around here. Now, right around here. So what that means is that this 20 EMA is moving up. It will also move up to coincide with that 168 level. So this 20 EMA is going to provide support, as it has done so right here. So that would be also from a daily perspective, a good area for it to find support. Additional support would be right around here, around the 163 level, which is where the low of this candle is. and beyond there the support would be the 200-day moving average, which is around 160. We don't want Apple stock to go below 160, because that would mean that it's going to fall below the 200-day. There's no suggestion at this point that that would happen, but those are the possible levels to look for, to see if the stock can. Obviously, we don't want to see it go below the 200-day moving 20 EMA, but even if it pulls back slightly below that, it's not a problem. But it's the 200-day and the 50 which would be quite important, because if it goes below the 50, that means it will have gone through several important moving averages, and that would suggest that the bulls are losing the battle. So there's no suggestion to say that that's going to happen, but those would be the levels to look out for if there's further weakness. The other thing we want to look at is the MACD. So on the MACD on a daily basis, starting to curl over, which is fine, it's not a problem. But what we don't want to see is fall below this zero line. This is the zero line. What we don't want is something like this. It crosses and then goes and falls below the zero line. That would indicate the weakening of momentum. RSI, we don't want RSI to fall below 50. RSI 50 was a resistance previously, so that should act as a support. So these would be the levels that you want to watch to see. As long as the MACD stays above the zero line, RSI momentum is still positive. It can consolidate and pull back a little bit, so that's not a problem. So support would be, just to summarize, around 168.50, then this moving average, then around 163, and then the 200-day moving average. Beyond this, it will suggest something a little bit more serious. So if that happens, we'll have additional discussion, but these would be the levels we want to look for. Thank you for watching the video.